You're looking to understand the investment potential of Taiwan Semiconductor Manufacturing, TSM. Let's get right to it. We've synthesized a recent report and a whole load of data to give you the critical insights fast.
Exactly. We've really dug into everything, stock performance metrics, what analysts are saying, the core financials, and, what's coming out of their own communications, like earnings calls.
Yeah, our aim in this deep dive is efficiency.
Yeah.
Basically arm you with the essential knowledge about TSM. So right now, the stock's trading around, what, $163.40?
Roughly there.
And just for context, its 52-week range has been $133.21 on the low end, up to $226.40. Market cap is huge, $847.48 billion.
It's a giant. No question.
Okay, so let's zero in on what really matters here.
Well, looking at the recent financials, the scale is just undeniable. They're trailing 12-month revenue, $2.04 trillion.
Trillion, wow.
Yeah, and that generated a net income of $922.43 billion. EPS trailing 12 months is $302.06.
Okay, and looking forward.
The forward PE ratio is sitting at 16.59. They do pay a dividend, yields 1.78%, which works out to about $2.47 USD annually.
And the next payout for that?
Expected around June 12th, 2025. And keep an eye out for their next earnings report that's due July 17th, 2025. So, yeah, these numbers paint a picture of a real powerhouse.
Definitely. But beyond just the numbers, TSM has this significant competitive edge, right? What analysts call a wide economic moat.
That's the term, yeah. And it's not just temporary. It's really built on their leadership in, well, incredibly complex advanced semiconductor manufacturing. We're talking those super advanced tiny processes.
Right, leading edge stuff.
Exactly. They're tech lead in those advanced nodes like 3 nanometer, 2 nanometer. It just creates this huge barrier for anyone trying to catch up.
And it's reinforced by other things, too.
Oh, absolutely. Strong customer relationships. The big players need their tech. Plus, the sheer amount of capital they pour back in, constantly investing billions just to stay ahead.
And their role in AI.
Crucial. Central, really. It just solidifies that dominance. It's not just about revenue from the leading nodes. It sort of locks in those big customers who need that top-tier performance. Makes it tough for competitors.
Right. And speaking of performance, their Q1 2025 results, they slightly beat expectations.
They did, yeah. Which, honestly, is pretty impressive given the earthquake back in January.
True. And the outlook for Q2 looks even stronger.
Yeah, here's where it gets interesting for the future. Their Q2 25 revenue guidance points to a pretty significant sequential jump around 13%.
13% quarter over quarter. And the driver is...
AI, no surprise there. Just relentless demand.
Connects to the bigger picture then. What about the full year?
Well, linking it up, their full year 2025 revenue growth is expected to land somewhere near the mid-20s% range in US dollar terms. So strong momentum continues.
And margins holding up.
It seems so. Q1 gross margin was healthy, 58.8%. Operating margin, 48.5%. And the Q2 guidance keeps them in that strong territory. Gross margin between 57 and 59%. Operating between 47 and 49.
Okay, so that AI demand is clearly pulling things forward. You mentioned advanced tech, the 7 nanometer and below stuff.
And just to clarify for listeners, those smaller nanometer numbers mean more advanced, more powerful chips, more transistors packed in, better performance, better NFLA efficiency. Crucial for AI, high-end computing.
Got it. And how much of their revenue comes from that advanced tech now?
A huge chunk, 73% of their wafer revenue. And get this, the revenue just from AI accelerators, think AI GPUs, specialized AI chips, HBM controllers.
The core AI hardware.
Exactly. That revenue stream alone is projected to double this year in 2025.
Double. Wow.
Yeah. And they're expecting something like a mid-40s% compound annual growth rate over the next 5 years just from that segment. It's a massive long-term driver.
Now, how are they handling that demand? Needs massive capacity, right?
It does. And they're aggressively ramping up their CoWoS capacity. That's the advanced packaging tech chip on wafer on substrate, vital for these high-performance AI chips.
And they're doubling that.
Aiming to double it in 2025. It really shows their commitment to meeting that demand surge head-on.
Needs a lot of investment, obviously. What's the CapEx plan?
For 2025, the budget is between US $38 billion and $42 billion. And about 70% of that is earmarked for those advanced processes we were talking about.
And a lot of that spending is going into global expansion, I gather.
Oh, yeah. Big time. The U.S. expansion in Arizona is just enormous. Total investment there is now pegged at $165 billion.
Well, $165 billion. For how many fabs?
Plans for 4 wafer fabs plus a big R&D center. The first fab is already churning out chips in high volume. The second one, focused on 3nm, is apparently complete.
Any potential hiccups there?
Well, one thing to watch is potential labor shortages in Arizona. That's definitely an execution risk they face. But importantly, they stress this is driven by customer demand, not, say, joint ventures with someone like Intel.
Right. The scale of this is just ambitious. Are there downsides we're not seeing?
Well, it's a massive undertaking. Execution risk is definitely there across the board.
And it's not just the U.S., is it? They're spreading out.
Wow, definitely broadening their footprint. In Japan, Kumamoto, their first specialty fab, is already in volume production, and a second one's planned.
Okay. Europe, too.
Progress in Dresden, Germany. That specialty fab is apparently on track. And even back in Taiwan, they're planning 11 more wafer fabs and 4 advanced packaging facilities.
They are certainly not standing still.
Yeah.
Clearly playing the long game. Okay, let's shift to the tech itself. What's coming down the pipeline? The roadmap.
Yeah, the innovation cycle is just relentless. Their N2 technology, that's 2nm, is scheduled for volume production in the second half of 2025.
So next year, basically.
Pretty much. Then an enhanced version, N2P, follows in the second half of 2026. And also landing in late 2026 is their A16 technology. That one features something called a super power rail for better efficiency.
A16, so even more advanced.
Yeah. Right. And they actually expect more new chip designs, more tape-outs for this 2nm tech in its first couple of years compared to how 3nm and 5nm launched.
Interesting. Means faster adoption.
Potentially, yeah. And they also just unveiled their A14 process recently, promising faster computing, better power efficiency, again, targeting AI and smartphones, pushing boundaries constantly.
Okay, this paints a pretty strong picture, potential-wise. But every investment has risks. What are the key challenges or concerns investors really need to keep in mind here?
Definitely. The big one discussed is margin dilution from building all these fabs overseas. It just costs more outside Taiwan.
How much dilution are they expecting?
They're projecting an initial hit of maybe 2 to 3%, possibly widening to 3 to 4%. That's due to cost inflation, different labor environments, and, crucially, the possibility of tariffs.
Tariffs. That's a big uncertainty.
Huge. They say they're working with customers on pricing to maybe offset some of it, but future tariffs, that's a major question mark. You even see warnings from suppliers like ASML about it.
And that ties into the broader geopolitical risks, too.
Absolutely. That whole landscape is a constant factor. It's worth noting, TSM says they haven't seen customers changing their behavior yet because of specific policies, but
it's something to watch closely. What other risks?
well, like many large tech companies, they rely on a relatively small number of very big customers. That concentration is always a risk factor, and of course, intense competition. The semiconductor space is brutal.
And the expansion itself.
Yeah, the execution risk. Managing such a massive global build-out is complex. We mentioned potential labor issues in Arizona. That's just one example of things that could slow them down or add costs.
Okay, so quite a bit to balance.
Mhm.
What's the general vibe from analysts? Where do they see the stock price going?
Looking at targets set in the last 6 months or so, the average is hovering around $215.
$215.
Yeah.
Any recent changes?
We've seen a mix. Barclays, for instance, lowered their target back in April to $215, down from $255. But then you had Bernstein raising theirs in June to $200, up from $150. So, differing views reflecting those complexities.
Yeah, makes sense. It sounds like you've got the classic bull versus bear arguments playing out. Could you summarize the main points on each side?
Sure. The bulls, the optimistic view, they really emphasize TSM's dominant market share, especially in leading-edge tech. They point to the massive growth runway from AI, the strategic global expansion to capture that demand, and their unwavering commitment to R&D and innovation.
They see the strengths outweighing the challenges.
Pretty much. They see these as powerful tailwinds that should keep driving growth and profits.
Okay. And the bears. What are their main worries?
The bears focus more on the potential downsides. That margin compression we talked about from overseas expansion and possible tariffs. The geopolitical uncertainty, that's always a big one for TSM.
The customer concentration risk, too.
Yep, reliance on a few key players. Plus the intense competition, Intel, Samsung, others trying to catch up. And finally, just the sheer execution risk of pulling off this incredibly ambitious global expansion smoothly.
So a lot for investors to weigh up. What about the report we looked at? Did it offer a specific fair value estimate?
It did, yeah. The report put the fair value estimate at $211.55.
$211.55. Okay. And comparing that to the current price, which was around $151 and $152 when the report came out.
Right, comparing it to the price mentioned in the report, around $151.82, it suggests, well, potentially significant upside, at least according to that specific analysis. Obviously, prices fluctuate.
Of course. One last detail, shareholder returns. Are they doing buybacks, focusing on dividends? What's their approach?
Their stated preference, what they communicate, is focusing on sustainable and, importantly, steadily increasing cash dividends over doing share buybacks.
Okay, got it. So let's try and wrap this up quickly. The key takeaways seem to be TSM is, without doubt, a leader in a supercritical industry. Huge growth potential, largely fueled by the AI boom.
Absolutely central to AI.
But, and it's a significant but, they face real risks. The costs and complexities of global expansion, potential margin hits, and the ever-present geopolitical backdrop.
Those are the main balancing factors, yes.
So, while the valuation might look attractive based on some analyses, like the report we saw, you really need to keep a close eye on how they manage these risks.
Couldn't agree more. Careful monitoring is crucial.
Right. And maybe that leads to a final thought for you, the listener, to ponder. With all these billions being invested, these huge shift in where chips are made globally, how might the competitive landscape in semiconductors actually change over, say, the next 10 years?
Yeah, what could be the big surprise, the unexpected development that maybe catches investors off guard? Something definitely worth thinking about.
Indeed. Well, if you found this focused analysis of TSM useful and you want more deep dives like this, please do subscribe to the channel and hit that notification bell.
Yeah, your support really helps us keep digging into this stuff and bringing you these insights quickly.
Thanks for joining us on this deep dive.